Many professionals assume that all types of interest are exempt under GST, but that is not entirely correct. In today's video, we will clearly understand GST treatment of interest and, more importantly, the circulars distinctions between the loan interest and the interest charged on delay payments. We will break this down. Either relevant provisions under section 15, subsection 2, subsection D, and exemptions, and what are the practical examples and common mistakes that can lead to GST exposure. So by end of this video, you will have complete clarity on when GST is applicable on GST and when it is not. Hello everyone, this is Gangadhar Reddy BCA. Welcome to the channel where we simplify complex tax and finance concepts with clarity and practical insights. If you are CA student, professional or business owner looking to stay updated with the GST, income tax and real world case analysis, make sure to subscribe and support the channel. Let's get started. See, what is the interest on GST? Today we will discuss about the understanding of GST and the loan interest and delay. There are two types of interest here. So what are the legal provisions? Let's go into it. Legal framework. Under this notification of 12 subsection 2017 of Central Tax Rules, under this entry, exemption for interest on loans. So if any interest coming from loans or cash credits or everything, all these loans are exempt. Under this 15 subsection to subsection D of CGST Act, interest for delayed payment including the value. Why it is valuable, why it is exempt, we will discuss in detail. First, interest on loan. Any loan between the entities or whatever the loans you treat in the business controls are exempt from GST. So the interest rate is the agreed rate. So there could be entity 1, there could be entity 2, there could be interest for entity 1 given loan to the entity 2 for interest. That interest has to be agreed. So 10% or 12%, whatever it is, that has to agreed, and no additional services for providing this loan. For true is sending goods or services to the even is incorrect. So there is no other transactions required to exempt the GST. So only loan and interest agreement is there. Only if it is only related to loan, it would be exempt. So GST is not applicable. There is a exempt supply under this notification. I already told in the notification number also. Under this notification number, this is the exempt. When then, what are the conditions for exemption? There should be a genuine loan and considerations is only interest. There is no other relationship between these parties. Say example, there is a company and there is one audit, there is one service vendor. So he give loan to the company. Say suppose 10 crores loan has given by this person to this company, but this company will give all manpower contracts to him. He provide the labor contracts and provide those contracts to the this company. So in that case, the loan, in the loan condition, the company has to prioritize is this person to give the contracts. So that is the one condition is there, right? There is no genuine loan agreement in this case. This case could be same, but could be genuine, but under the GST, to get that exemption, to get that exemption for GST on interest, this is the not valid for the GST perspective. So he has to genuine loan agreement. There is no other considerations for this. Only interest is the consideration for this guy, and no processing and additional fees are required. I mean, if any processing fees or any conditions as applicable to that loan, that would be may lack the exemption. The proper accounting as an interest only, of course, right? The compliance impact. Once it is not an exempt, no, we don't need to ignore that. You need to show that in the GST 3B under exempt income. So generally company 1, company A give loan to company B. So in company A, it is a revenue only, interest revenue will come, right? So that interest revenue has to shown as an exempt income. Generally most of the companies will ignore this point. So they don't show in the GST 3B return, and later they reconcile in the 9C or 9 returns. So that could be problem for corporates. Please understand this compliance impact in the part of interest. And ITC reveal under 42 and 43. If any interest, if any ITC related to these loan providers, say suppose company A give these loans to this guy, but company A get some inputs, some banks, and for forex from forex and some many USD compliances, there could be some ITC get credit from for the A company. So he can't reversal. He can't stay that ITC in the ledgers. He has to reverse that ITC. That is the second condition. If any transfer pricing check also, that if it is related parties, you need to check the transfer pricings also. So that, I mean, the TP margin and the arm length price all has to be compiled. So these are the interest up to loans. If any delayed payments on the interest, the concept is arises due to delayed payment of the supplier. It is not a loan. It is linked to original supply. What is the original supply? Different. What is the original supply? He supplied one, say suppose A company, B company. He supplied some goods or services to this guy. So he has to pay the money within 30 days. But if 30 days, if he is not paid within 30 days, he has to pay with interest of 12%. So say suppose this is a 1 lakh. If he exceed the loan payments, he has to pay 1 lakh 12,000. See the interest for 1 year if he paid in 1 year. So for this 12,000 interest, it is not an loan, it is a main supply. So what is the conditions here? So generally it is taxable. I will explain why. GST and delayed payment. So that is the delayed payment only, right? So he has to pay within 30 days, but he has paid in 1 year. In this situation, under this section, interest or delayed payments or penalties, whatever it is for the delay, is part of the value. That is GST applicability means, but in the condition in the GST in the valuation definitions, the value of the supply includes the main value, that 1 lakh, plus other delays or interest payments or penalties, whatever it is, that has to be added to the value of the supply. Say suppose in this situation the 1 lakh is the value of the supply, plus the delay and interest payments, the 12,000. If suppose he has paid in 1 year, the entire 1,20,000 is value of the supply in that related goods or services for this under this particular section. So in this case, GST is applicable for this 12,000, as it is not a loan. If the example is like, say this is the supply is of 10 lakhs, the GST is 1,80,000, the delayed payment is 1 lakh, the additional GST on this 1 lakh has to pay, because this has added to the supply. Common mistakes. Generally, where we go the mistakes. Treating all interest or exempt. This is not incorrect. So we have to check either it is a loan interest or it is a delayed interest. If it is a loan interest, it would be exempt. If it is a delayed interest, it is a taxable. So kindly conscious about these loans to avoid the common mistakes. So if you conclude the video, interest, loan interest is no exempt. If it is delayed, GST is applicable. You have to structure properly, like 3B returns or loan agreements and TP agreements and 3B returns. Everything you have to compile clarity. So I hope you understand this video. If it is helpful to you guys, please subscribe our video. Thank you.